recipe. Put all that time and dedication in the pot to simmer, then let it be. I don't know what it done told you, don't let them fold you, keep it the letter G. Humble yourself with the patience, you gotta pace to get where you wanna be. All the pain just show that you seasoned, gotta believe it. Just give me the cheat code, and none of the struggles come with the glory, tell them to keep those. All of the pain just come with the game, I treat them like free throws. All of the evil sticking around, I had to delete those. Yeah, I had to defeat those. Just give me the cheat code.
All right, let's get at it, y'all. Let's get at it. Let me actually put this on the screen behind me. We got the cheat code here. All right, today we're going to do a quick live stream just of a few things you need to watch in order for you to be able to see the entire market, okay? So let me bring up the cheat code behind me here. All right. So you're going to be watching these tickers, especially if you're watching the S&P 500. I need you to watch these tickers as well. And it's going to be three things that you'll watch with the S&P 500. Hold on one second. All right, let's see. So you're going to watch the VIX, let's see here. I've got it jotted down as well. Gold and the dollar. Let me make sure that we're streaming on YouTube. Nice. We are on YouTube, y'all. Let's get it. All right. So I've got a couple of these things charted here. So I'm going to pull it up. I'm going to share my screen so that you all can see what I'm looking at. Let's see here. Screen, understand, proceed, window. Let's do it. Okay. So we got this up here. Let me pull this up. That way you all can see it. And up first, oh, we got my favorite ticker, TQQQ. That's one thing you all need to add to your watch list, especially if you're into tech or you're bullish on the NASDAQ. That's a great ETF to watch. It's a leveraged ETF. It moves a lot quicker. So it's like trading options, but with shares. Let me pull up first. Let's take a look at where the S&P 500 is right now as a market. Because what I'm going to show you all is how to really be able to find resistance and support in the market. All right. So right now we got the cheat code. I'll go up. Right now we've run up to this third price target, as you can see. And we're running into a little bit of resistance at like around 4,000, which would also be around 400 for the SPY. So for people that trade the SPY, we have that here as well. I usually trade the SPY with options, so I actually have this charted. So with the SPY, you can see here that we have run into a major trend line, which is that blue trend line right here. We actually have somebody in the community, Bucky, that calls it the Mayweather line. Literally every time the S&P 500 drops up to this line, it just gets knocked out. And right now this line is undefeated. So as you can see in 2022, all of 2022, it was just coming to this line and rejecting, right? So if we began to see these types of trends, you know, it's definitely something to pay attention to, because right now we are driving right back there. So I've got that highlighted with this yellow arrow here as well. So let me make sure we're still streaming on YouTube and we're good. Let me see here. Let me see if I can actually see any of your questions. Yes, sir. We back. Hey, peace to the guys. Good people. What's up? We back. Yes, we are. Let me actually make sure I can see the chat as well. Okay, cool. Peace to the guys. Cool. What's up, y'all? We glad. I'm glad y'all glad we back, because I'm glad to be back. But what I want you all to see here, when you're watching the market, if you're asking yourself, should you be bullish or should you be bearish? You want to make sure that you're paying attention to where the market is in terms of always looking left. I feel like anytime you need to ask yourself that question, you don't need a crystal ball. You need to always look to the left, because previous history will tell us what's going to be happening, right? And if you use a daily chart, you can actually chart these large areas of support or resistance. Right here, you can see where I got this line. You can see right here around 411. You could even say 410, right, is somewhere that we run into some resistance. You can see what happens here around 410. It consolidates and breaks through. Again, we came here, consolidated, broke up, came back, consolidated, broke down, right? Again, it came here, rejected. All right, we came here again against this Mayweather trend line, got rejected again. J Powell spoke, drove us back to this trend line, got rejected again, and here we are again. Okay, that's why I'm saying pay attention to these things. So if you're asking yourself, do you need to be bullish or bearish? Here's some other things that you should pay attention to. Number one is going to be the VIX. Okay. So the VIX, if you do not know, it's going to be the volatility in the market. This is essentially going to measure, I mean, you could call it a fear gauge, right? The higher this goes, the more fear there is in the market. The lower this goes, the more greed there is in the market. So in a sense of looking at this in the manner of fear or greed, right now you can see that the market is extremely greedy, which is why this has been rallying, right? And the VIX has been coming lower. Right. So right now you want to pay attention to this level because here you can see that we came down to this same level right here. This is 20. This lower yellow line is 20. So that just as a reference, if you're an investor, right, the way you want to look at this is a gauge. Okay. The higher this goes, the more opportunity there is for you to buy. The lower this is, the more you need to be protecting your whatever you're holding, right? You should be hedging at this point. Anytime the VIX goes below 20, you should be looking for something to happen in the market that's going to bring stocks lower. Because if this goes up, stocks go down. So always pay attention to this because usually buying stocks when the VIX is below 20 is not a good idea. That's why I really wanted to make this video so that you all understand it's not about buy all the time, right? If you have the knowledge to know when is the best time to buy whatever it is that you want to buy, you want to make sure that you're watching the market as a whole and the sentiment in that. And right now it's extremely greedy. It's driving this below 20, and that's not the great time to be buying assets, honestly. So because when this spikes up, stocks are going to go down. So really you want to be buying when the VIX is over 30. And just to show you in terms of retrospect what happens, let's move this on the weekly just to show you what happens when this spikes up, right? So the last time it was even above, say 70, this is crazy. That was March 2020, right? And just before that, we were cruising, having a grand old time before the pandemic, and we were below 20, right? So it was like the calm before the storm. That's why a lot of politicians were selling stocks around February of 2020 because we come into March. And it's like you don't have to have a crystal ball to understand something's bad is about to happen, right? And then when you look at the market where we came out in 2021, where it was fueled by just PPP loans and, free cash from the government, we were just running sky high, right? So this was what was scary about it because leading into 2022, you can see that this began to kind of spike up, and which has led to the disaster that we've had this year because it's just continuously spiked up. So just in last year, you can see here that when we came down, let me turn this back on the daily, you can kind of see a little more. But every time this comes down, you can see it spikes back up, bring the market down, right? So every time this comes down, it only takes a matter of time for it to set off the swing, the squeeze. Anytime it comes down to below 20, you're just waiting on signals here. Right now, we're below 20. The swing is already kind of on this red, just letting us know we're pretty low here. You can see the squeeze is coming down here. So, I mean, it's only a matter of time before this spikes up. So pay attention to the VIX. All right, so that's number one. Number two, I want you to pay attention to the dollar, okay? Because the dollar is something that also is an inverse to the market. So when the market goes up, the dollar goes down, okay? So I've got this chart here as well. Make sure we don't have any questions. What's up? Nonstop grind all day, baby. I mean, I'm here because I want you all to understand what you need to be looking at because I realize a lot of people are really eager to make money, but the market's going to be here and it does a whole lot of ups and downs, and it's going to be best for you to buy when it's down and not when it's running up. Okay, so there's no rush for you all to just be so eager to get into the market. So pay attention. Okay, so the dollar is the next thing we were looking at. So first we got the VIX, next we got the dollar, okay? Now, when you're looking at the dollar, like I said, this has an inverse relationship to the market. When this goes up, stocks are going down. When this goes down, stocks are going up, all right? So as you can see, it's pulled it down to this level here at 101, 101.50 or 102, you can even say, just to play it safe, right? But like I said, you want to know what's going on, always look left, right? So when we look left, what happened around here, right? back in May 2020, June 2020 as well. We came here and found support here and took off, right? So if this was going up, that means the market's coming down. All right. So in June, had this pullback. Really, it kept on riding up. This was the amount. This whole run up for the dollar here was where you are seeing the euro go down, the pound goes down, because when the dollar goes up, it's going up against other currencies. So when the dollar is going up, you know, the euro is going down, the pound is going down, and not only that, the value of gold is going down. Everything that is valued against the dollar, if this is going up, it brings the value of those down because the dollar is becoming stronger, right? So as this goes up, it's pulling everything down with it, right? But when it comes down, you start to see the gold starting to reach new highs, and analysts saying gold is going to hit a new high in 2023, right? And it's essentially been on a bullish run for gold because the dollar has been brought down. And that's why the euro is not at parity to the dollar anymore right now. And the pound is starting to regain some of what it lost against the dollar as the dollar moves lower. Right. But like I said, always pay attention to supports and resistance on larger time frames. We're looking at the daily here. So when this is rejected here, you can see it found support at this line here and bounced right back up here, found rejection, kind of consolidated to break through, broke through. Now, when it breaks through and starts to reach new all-time highs, don't try to guess that based on price. We don't have anything to the left to compare that to, right? We're reaching all-time, or we're reaching new highs. So when this happens and you're up in no man's land, you want to make sure you're using other indicators. So we got the squeeze, it's running too high. We got the swing coming up too high. So literally, when you saw this caution candle right here and this indicator, you were literally just waiting on this to go ahead and make its way down. So if you're trading Forex or anything like that, this is still a great thing for you to know and watch, because like I said, if you can see that the dollar's about to come down, you can be bullish on the euro, or you can be bullish on the pound. You can be bullish if you trade futures and gold, right? This watching the dollar is extremely important. So once it came back to this 105 level right here, man, it took off and started. I mean, the dollar was so strong, it was ridiculous. And it was just a matter of time for it to come down. Like I said, anytime the price is reaching somewhere of new highs, you want to use other indicators to see when is that going to give. All right, so once we're here, we are back to where we started back all the way here in 2022. Okay. And I want to just give you some perspective. Before September of last year, this was where we were on this support level in August. And then boom, here comes September. The dollar goes breaking through, just bringing the stock market down. Okay. So with that being said, if the dollar is finding support here, and if it does find support and it decides to reverse from here, it's going to bring stocks down. Okay. This is another thing though. If this is down and the VIX is down, it's like two things saying that, whoa, you need to be patient. Okay. All right. So we got the dollar and we got the VIX. Okay. And next, we're going to look at gold, because I've been talking about gold. I want to make sure we don't have any questions. Great information. Yes. Okay. Back to the charts here. Now, there's several ETFs you can use. You can use GDX. You can use GLD. I personally like to just look at the actual price of gold. So we're going to look at XAUUSD. Okay. Now we have gold here. I believe that I believe that this is when I was just showing some consolidation that was happening before breakouts. Okay, so this is back to gold. Its little line or its area of resistance and support is going to be 1,800. Okay, so 1,800 is a key price that you need to pay attention to if you're interested in gold. You know, I know a lot of analysts saying gold's going to reach new highs in 2023. A lot of people are asking me, where can they buy gold bricks? I mean, number one, you can buy them at any jewelry store or any sort of we buy gold place. But there, if you go to Abu Dhabi, there's literally a gold ATM. Like you can buy gold bricks like in a vending machine. It's pretty legit. But okay, looking at gold here, I want you all to pay attention to this 1,800. Okay. Now, in the past, we failed here. Now, gold has it actually goes with the market. So like I said, if the dollar goes down, gold goes up. So since the dollar has fallen to support, gold has been just pushing, right? So also the stocks have been pushing, right? And we've been seeing this little rally. And right now, if you look at past what happened at 1800, why 1800 is key. In the past, we fell here, right? We found some support, fell here again, found some support, came here again, consolidated for 3 days and just collapsed. Okay. And if you want to chart, why we collapse to the levels that we collapse to, like I said, your answers are always to the left. Okay. So if anytime you want to know why a price is being hit, or you're like, well, how far can gold go? Right. Well, we know that 1675 right here seems to be quite, I mean, this is just for an example. If you're charting gold and you're like, how low can it go? Well, if it had to drop pretty low, 1685 would say be the next level at which it can get support if it ever breaks below 1800, right? 1800 is going to fall here to 1650 or 1675, bounce on back up to 1800, reject again, right? Sometimes it can break through, but you can always look to the left and figure out where it's going to stop, all right? But focusing back on 1800, right? If we see the 1800 consolidation breaking up and coming back here, finding some support, bouncing up, coming here, bouncing again, breaking through to this 1675, coming back to 1800. So 1800 was a lot of support here, support, but then it became resistance once it broke through, right? And so once it was able to reclaim the 1675, it was just going to chug its way back to 1800. Literally came to up close to 1800 here and pulled on back to bust on higher, right? Because before you make any new highs, that's why I say, like, anytime you're in the market and you're like, I see a great opportunity, just be patient, because a lot of times you're right here when you could have just been patient enough to wait for this, right? And again, we're right here and everybody's like, I need to buy. And it's like, yo, calm down. Like, because look at where we are, right? And look at where this was last time we were even this high, right? So when you look at relatively where gold is, if gold is peaked out, I don't care where the S&P 500 is going, this has got to pull back. And when it does, it's going to pull stocks back with it because it's going to push the dollar up, and the VIX is going to rise because fear is going to start setting in when stop losses start to get hit. So this is the third thing that you need to watch, right? Now, a bonus one I'm going to give you is something that you can just watch as an inverse directly to the S&P 500, which one of my favorites to trade is XPXU. Now, this in particular is something that you want to watch. Let's say you want to ever hedge your portfolio, or anytime you are just looking for something that's like the resistance to you, right? Like if I'm in the XPX, which is the S&P 500, if I'm invested in an index fund that's the S&P 500, I want to know, well, where does this rally stop? Right? Number one, I always say look left, because history is going to tell us, right? Because even if you make a line as to where it resisted last time, let's say just 410, right? Or 4078, but we can move it up to 10, or we'll just put another line. Let's do another one, say right here at 420, right? So you can say that this is literally a line in which to say that if the market comes up here, it's got to give. Now, when you look at the SPY, which is an ETF for S&P 500, like I said, we're running right into this Mayweather trend line. I want to make sure we have any questions. Cool. And drop any questions in the chat. I want to answer that too. I want to make this like a live Q&A, but also a lesson, so you all can come back, watch this over and over, and you can learn from this. But when you look at the S&P 500, you're like, okay, if I'm trading the SPY, which is the ETF that tracks the S&P 500, is this going to reject here, right? Now, if you want to look at something that is the direct inverse of you, right? Now, if you're looking for resistance on the S&P 500, then use the XPXU to find support. Because if this thing finds support, it's like the resistance of the S&P 500, right? So if this is falling to areas where it has seen demand, right? If we know that in this little price range that I've got from 15 to 1350, you can see here that when it comes here, it just makes its way out, and it comes back, resets, makes its way out, comes back, gets close, bounces off here, but nonetheless comes right back to this area to take on right off, right? And so we're pulling right back in this area where this thing likes to take off, right? And if this is going to take off, you got to be careful because yeah, this will be working against you essentially. So if this starts to go up, stocks go down. So if this is finding support, the VIX is finding support, and the dollar is finding support, all of which have an inverse relationship to the S&P 500. I mean, you've got to take whatever you learn from this video, and just I hope it helps you make the best decisions because it's up to you. None of this is financial advice. I'm telling you these things so you know whether you need to be bullish or bearish for the end of the market. And if you like to day trade, just use this on a smaller time frame. It works the same, right? If you're looking at, let's see, the dollar even, just look at a smaller time frame, right? And then you can come in and just trade these particular trends. Let me actually put it on like a 4 hour. Let me get off of this here, YouTube. Yeah, so let me see if y'all have any questions. No questions. But if you like to day trade or something, you can always come in and use this on a smaller time frame and say, okay, the dollar is kind of reaching resistance, so I can expect a little bit of a pullback in stocks, today, like an actual bullish trend in stocks if the dollar pulls back, right? But if we see, let's see right here where the dollar is going to pull back, you can say bullish on stocks. But if you see the dollar is about to rise, or if you find support in these reversal bands, then you can be like, hey, all right, for today, for December 15th of 2022, I'm bearish today because I believe the dollar could run up, which will bring stocks down, right? And so you can use this on smaller time frames. Even if you were to come in the market on January 6th, Friday, you could have known it would have been put city because you're like, well, or you could have known that the market was going to rally because you could see that, oh man, the dollar is peaking right here. It's going to pull back on this 4 hour. Let me get prepared to, buy some calls or, buy some shares to ride this rally on up, or, calls, whatever you do, right? Because you can trade Forex, you can do crypto, you can use these things to watch the entire market, right? So you don't have to be so overwhelmed as to what Apple's doing, what Microsoft's doing, what Tesla's doing, what Neo's doing, or anything that you decide to watch. None of those are recommendations, by the way. I'm just naming off like top stocks. But let's see, we've been doing this for 30 minutes. I gave y'all those right there. Let me see if I can give you some other sauce. I'm gonna give you one more like a bonus sauce, and then I'm gonna get off of here because I don't want to run these long. We have these live sessions that we do in our community, so we need to. I don't want to take up any space from those. If you're not in premium, you can get in premium. You're missing out. Let me actually show you what's in the Discord. Just take a look. If you're not in premium, you'll be able to access just these public channels right here. So you can get literally free access to this chat room right here. You can come in, get analysis, ask questions. There's trade alerts that come in here as well. You can get free live calls here. We even have a cheat sheet for you where we're giving earnings and everything out here. Now, if you're premium, this is where the action is. This is actually a premium chat where you're actually getting, analysis with it as well. And you have a stock chat room. And on top of that, you got live trade alerts here. So we're literally showing you what tickers, what the entries are. Here's some alerts. So if you're not premium, you're definitely missing out. But let me show you all one more thing. This is like a bonus, okay? If you're trading options or if you're invested in stocks or trading shares, you need to be familiar with bar chart. Is this on the screen? Let me make sure you all can see this. Cool. How do I get these indicators like yourself? You got to get the cheat code algo, man. Look, this thing is legit. It's locked too. So like, I became lethal when I got the cheat code algo, y'all. Like this was next level because like I don't have to guess, I don't have to see, I don't even have to chart really. I mean, I would suggest charting support and resistance, but I come in here and look at the daily and I say, what is the cheat code algo telling me? It's telling me that even if it does run a 408, there got a lot of resistance up here just based on where we are with this Mayweather trend line. These caution candles really tell you a warning as well. And if we look on the 4 hour, you might see some even better signs here. you know, you already got a caution candle right here telling you that we've got some resistance. You had this indicator already pushing this down. So right now, even on the 4-hour, they're closing up on this little Mayweather trend line right here. So the bulls don't very much have, like, the risk to reward ratio right here is very low. I mean, it's actually, yeah, it's low. Like, you would be risking a lot to not make that much here. But that's not to say this won't break out and run, you know. But I mean, even on the 4-hour, like I said, I don't think this is not the best place for you to be bullish, right? If you see that when it comes high, it gets rejected from this, right? Why would you want to be so bullish here? But I digress. How do I get the indicators? Yes, cheat code algo, baby. You can go to, if you go to Instagram, you can just click the link in our bio, and you'll be able to click here and go to cheat code algo, and you can get it right here. You feel me? But let me go back to bar chart. This is for traders and investors, so pay attention. I'm always a huge advocate of looking at the put call ratios. Like, I used to be really big on this, especially if you're a day trader. I used to actually track these numbers depending on what I'm watching. Like, if I trade Tesla and Apple, I'm tracking what the change is. Is it going up? Is it going down? Right? Are they buying more calls? Or are they buying more puts? The put call ratio is essentially the puts divided by calls. So the higher this number is, the more puts there are, right? So if it's below 1, that means that there's more calls than there are puts. But once it goes over 1, that means that there are more puts against it than there are calls, right? So when you're looking at this, that's the reason why you need to keep track of this, because you can't just come in one day and say, okay, Tesla's put call ratio is below 1, so everybody must be bullish, right? This could tell us one of two things, right? It's either low because, you know, people are running on this rally, right? Or it could begin to decrease or increase for the next few days, and that'll tell you what's happening. Are people letting go of these calls, or are people, you know, adding more puts, right? What's the ratio looking like? And so you want to pay attention to this number, because it's very important what's happening. Because if this is increasing, that means that there's more puts coming in the market. If it's decreasing, then that means that there's less people standing in your way, and you can go on and be bullish all you want, right? So pay attention to the put call ratio. And if you don't understand the put call ratio, the percentages are here right for you, right? Like I said, if it's below, or if it's above 1, there's more puts. If it's below 1, that means there's more calls, because this is puts divided by calls. So if it's 1.1, that means that it's just 1-to-1, right? If it's 2.1, if it's 2.1, that means there's 2 puts for every 1 call. So pay attention to this. Like for Ford Motor, it has 2.04 put call ratio. That means that right now Ford is heavily shorted. But like I said, that don't mean that you just go be like, I'm gonna go short Ford. That means that at some point they're gonna start selling, which is going to push Ford up, because really this is like having a put call ratio as high as 2. That's like pulling a slingshot all the way back, right? If people start buying Ford, and these shorts have to start, buying their positions, or puts start selling their position, then it'll allow Ford to go on and ride on up back to $19 or something. That's not financial advice. I'm just telling you that because it's high doesn't mean that it's beat up. It does mean that there could be an opportunity if people start buying it up, So pay attention to the put call ratio. You can see it here on barchart.com. And stay tuned for the next one. We're going to do these every now and then, little pop-ups. Let me close this window, leave. But let me make sure can you say that again about the ratio? So the put call ratio, when you're using the put call ratio, the higher that number is, the more puts there are against that particular stock. Okay. But because it is a high put call ratio, that does not mean that it's like something that you should just run and go short. It just means that essentially there are a lot of people shorting it or buying puts against it. But at some point, they can sell, and then that high put call ratio becomes like I said, like a slingshot pulling itself back. And as those puts begin to sell, it pushes the price up and lowers the put call ratio. So it's always something you want to pay attention to, just anything that you're watching. Let's see here. All right, cool. Any more questions? We're good. No more questions. Well, that's it for today. Just to recap, like I said, if you're watching the market and you want to know when to be bullish or bearish, make sure you're paying attention to the dollar, the VIX, and also bearish ETFs, right? There's one for just about every industry, every sector. I mean, you know, even Kathy Wood's fund has inverse ETFs, right? So find your inverse and make sure you're watching that, because the dollar, the VIX, and your inverse ETF, if it's a bearish one, it's going to show you like if you're looking for resistance, these things you're going to be wanting to look for in support, because support, when these inverses find support, that means when they find support to go up, it's going to bring your asset down. Okay, how can I get the cheat code? Magnetoni. Y'all know how to get it, man. Link on here. You can even, man, drop it in the chat. You can go to our Instagram as well. It's in the bio. It's in the bio on our YouTube as well. You can even go to shop.cheatcode.com. Okay, shop.cheatcode.com. Actually, if you go to shop.cheatcode.com, there's actually we have a sale going on, like a bundle. So you'll be able to get the masterclass courses plus the live community trade alerts and everything like that. And also we have Trade Heroes trade alerts. We're going to get on IG live and do just a recap of those, because they've been killing it. So if you don't have the Trade Heroes, shop.cheatcode.com, go there and you can get access to that as well. But go back, if you need to learn anything from this video, go back, watch it again. Like I said, watch the VIX, the dollar, and your bearish ETF. It's going to tell you when you need to be looking for that resistance or support on the inverse relationships, as well as watching gold, because gold moves with stocks. If gold goes up, stocks go up. If gold goes down, stocks go down as well. So with gold reaching new highs or really starting to push that resistance, it's got to pull back at somewhere before it goes any higher. So make sure you're not just rushing to buy assets right now, because if gold comes down, stocks will too. Okay, so pay attention to those four things, and man, hopefully that lets you know whether to be bullish or bearish in the market. It's been fun. We ain't got no more questions. Thank you for the jewels all day, baby. Cheater fam, let's get it. Shop.cheatcode.com. I love y'all. See y'all for the next one. Let's get it.